Hello, chart watchers, and welcome to this Monday, May 6th, 2019 Market Watchers Live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Well, the morning got off to a rough start. Of course, there's some trade tensions building again between U.S. and China. You can see the Dow Jones Industrial Average currently down 228 points, but that is quite a bit of improvement over the earlier low, which you could see down closer to 26,000. We're now at 26,276. The S&P 500 down 27, the NASDAQ down 77. The Russell 2000 has gotten back almost all of its losses, back up at 1609, only down 5 points. Remember on Friday with the strong jobs number, we actually saw the Russell 2000 make that breakout above 1600. So it is continuing to lead on a relative basis, which is good news for the domestic economy. 10-year Treasury yield down almost 5 basis points, back down beneath 2.50%, and threatening the low that we saw back in April around that 2.47 level. I think the bond market continues to signal to the Fed, you better watch deflation. Volatility index, after shooting higher earlier this morning up over 18, is back down around 16 still. That's up 25, almost 26% off of Friday's close. Wanted to point out some of the iShares from around the globe really struggling with this trade news, mostly in Asia. That's where we're seeing the biggest area of weakness. Singapore iShares, the EWS, down more than 3.25%. China's FXI down a little over 3%, and Hong Kong EWH down about 2.75%. Here in the U.S., materials taking on the chin off of the earlier low, but you can see this downtrend continuing on materials. That ETF down 1.4%. But surprisingly, within the materials, you can see gold shares doing very well today. I'll go over this in just a second, but there is a positive divergence on the GLD, which I think suggests we might be able to get back up around that 122 and a quarter area. We shall see. And then semiconductors within the technology area having a rough day so far. You can see down 86 points, more than a couple percent. And a big earnings report coming out after the bell today. We've got KLA-Tencor, which has been one of the leaders in the semi space, reporting right after the market closes. So lots to keep in mind there on the semiconductors. But they, in my opinion, remain one of the leaders in the market. I would not be surprised to see a bottom go in fairly soon. And if we get a strong report out of KLA-Tencor today, that could be the catalyst to maybe start another move to the upside. We'll see. All right, Erin, it is the start of a new week. Of course, we had a big jobs report on Friday, which was so strong, but then we had trade tensions building over the weekend again between U.S. and China, and now we're right back to square one. How are you doing today?
I am doing quite well, thank you. A little cloudy here, though, kind of overcast. I wish the sun were out.
Yeah, we had the PGA tournament here in Charlotte over the weekend. I didn't get a chance to get out, unfortunately. I had too many things going on, but had some pretty good weather here. It was a little humid part of the weekend. Did have some showers, but not bad for the Pro Tour.
Yes. Well, wine tasting was very nice yesterday. The weather was perfect for it. So great weekend.
Yep.
Now we face this week in the market.
The weather was not conducive for markets to continue going higher because we got some.
Apparently so.
Yeah, we've got some issues today. We'll talk about all that in a minute. I'm going to go ahead and let you take it away so we can get started.
All right, let's do this. Okay, upcoming schedule tomorrow. Tom is going to be going over the May seasonality, just to give you a heads up on what to expect. Brian Livingston is going to be here on Wednesday. And on Thursday, we have John Murphy. Woohoo! Definitely want to mark your calendars. May 9th, John Murphy will be with us here on Market Watchers Live. All right, today, what's going on? Monday setups. It is Monday. We will give you our picks. Go ahead and take the poll so we know what the audience pick is going to be when we get there. Earnings Spotlight is next up, and then we have a 10 and 10. I thought we'd start with General Electric. I thought the pattern was looking a little interesting. And then Sentiment will finish off the show. All right, let's get started, though. Tom, technical news and headlines.
All right, there weren't any economic reports, but I'll go ahead and jump into the chart here. Hold on one second. All right, so here's the 10-year Treasury yield, and you can see that steady decline continues. And what was really shocking to me wasn't so much today. I mean, obviously, we had this trade news blow up over the weekend again. President Trump indicated that, looking at some increased tariffs. Obviously, the talks maybe are breaking down or not going the way both sides were hoping they would. China has responded and said that they may just pull out of the talks altogether. And so just back and forth, and maybe some of it's just negotiating, trying to get their points across in the final deal. Who knows? But the market's still rattled around the globe. You can see the 10-year Treasury yield. Anytime you get news like this, you tend to have a flight to safety. I mentioned gold earlier, and we'll look at that chart in just a couple of minutes. But, gold is up, treasuries are up. That sends the yield down. The best performing sectors are mostly the consumer staples, utilities, those more defensive areas. And so anytime you get a scare like this, that's generally what you're going to see in the market. So I'm not too surprised. But I think the bigger message here, and let's forget about the fact that the 10-year Treasury yield's down 4 or 5 basis points today. I think that the real bigger issue here is that the bond market continues to tell the Fed that deflation is the issue. It is not inflation. And the bond market tried to send the Fed the message back here in the latter part of 2018 that we shouldn't be looking at rate hikes. We should be looking at rate cuts. And the Fed was adamant, if you remember, talking about, oh, no, we've seen multiple rate hikes coming in 2019. The economy's picking up steam, and we know who won out that battle. 10-year Treasury yield, the bond traders won out. And eventually the Fed came back and said, well, let's scrap those plans for the rate hikes. Maybe we'll get one in 2019, but we don't really see much going on in 2018. And then again, just recently, we've seen the Fed, talking about some of the inflation, the fact that inflation's lower than expected, that's transitory, and that we're going to return to the norm. The bond market's kind of arguing with them and saying, well, we don't think so. And we still think a rate cut is going to come before a rate hike. So we've got a little back and forth action there. To me, that's the bigger picture here. If we can keep inflation, a little bit of inflation below the target, keep rates low, I think Warren Buffett said it best. He said this is a great environment. Low interest rates is a great environment for stocks. And I believe that. I think as long as we don't have accelerating deflation or all of a sudden the Fed going against what the bond market is saying, I think we're in good shape. But anyhow, let's move on to the earnings reports. We have a ton of earnings still coming out. Most of these are smaller companies. Most of the big companies have already reported, but we will still get a smattering of some of the bigger companies and a lot of the second tier companies. I think Wednesday and Thursday of this week, we have over 300 companies reporting each day. So earnings season is still going strong. It's just that a lot of the companies that will be reporting are not household names, many of them. All right, here you can see on your screen earnings reports out. A couple of the big ones, and I might talk about this a little bit later when John Hopkins joins during Earnings Spotlight. But Cisco Corp, Tyson's Food, both food companies coming in with really strong numbers. And I think for the most part, these two companies have performed pretty well on a relative basis and continue to show well. The only miss here on your screen was affiliated managers. And if you take a look at what's going on with the asset managers group, that should not be a surprise. This is not a great looking stock, not in a great area of the market, and getting treated as such as well. Anyhow, after the bell, you can see some companies coming up. KLA 10 Core, KLAC, the big one there on that list that I would continue to watch pretty closely. All right, let's take a look at, before I get into any of these companies, individual companies, I do want to pull up the GLD and just show you what I am seeing there. So bear with me. Okay, if you take a look, now you might look at this and say, well, we have equal lows. We don't have lower lows to go with this higher PPO. But candlesticks can be a little misleading sometimes. The one time that I like line charts is when you're trying to look for divergences, because line charts only connect closes. And your PPO, your MACD, PMO, all of these momentum oscillators are based on closing prices. So if I switch this from candlestick to a solid line, I think it's easier now to see that you actually do have a lower close in play here with a higher PPO reading. So I think we could get back through this 20-day moving average, maybe make a run for the 50. but I do believe that the top we saw in February was a significant top. Unless the dollar reverses course, I see the dollar continuing to go higher. And if that's the case, even if we do get another 1% or so to the upside on gold, I believe we're going to turn back around and head lower again. And especially if we look at a longer term chart, the GLD versus the S&P 500. I'm going to pull this up weekly, and we can just go back the last 10 years. Throughout this bull market, what you're going to see is that gold has been underperforming the S&P 500. So yeah, it's having a decent day to day, but you can see the relative underperformance. I think it's pretty clear. We've had a couple of pockets, few months here, another few months here, maybe 6 months here back in 2011, where we saw relative strength in gold, but that has really been very sporadic. We haven't seen that very often, and the reason being is definitely the fact that the U.S. dollar, since 2011, that was the bottom, and you can see these lows continue to get higher and higher, and as they continue to get higher and higher, gold continues to get lower and lower on a relative basis. So that's why I don't like gold. Short term, again, with a positive divergence, maybe we get a little bit more action to the upside, but personally, I think that is an opportunity to sell. All right, I wanted to get into a couple of things on my blog article today. I did recap Friday's jobs report, and that was strong. You can see industrials trying to get back through a key level at 79. If we can ultimately get there, that would be very bullish for the market. We'll have to wait to see, especially after the weakness today, where we finish there. But one thing I wanted to point out, there were a couple of industry groups that I had illustrated here in this morning's article, one being industrial machinery. And if you notice on Friday, industrial machinery made a breakout above the September high. And when you look at the relative strength relative to industrials, so it's industrial peers, and then relative to the S&P 500, this is a group that you want to at least have on your radar because it's outperforming the XLI and the S&P 500. Now, if I scroll down to the sector industry watch, I looked at durable household products, which was the best performing industry group in consumer discretionary on Friday. Had a huge day, and you can check this out. If you look over the last, well, in 2019, we just broke to a 2019 high. We do still have that December high to try to negotiate. And if you're looking, you got a nice little trend line building. So you might look at this and say, well, this looks like a really good chart. This looks like an area I might want to consider as well. I think you might want to hold off a little bit on that, because durable household products versus consumer discretionary, yes, we have seen a little bit of relative strength, but we've seen this before, only to turn lower again. So I think here you can kind of see a downtrend that's been in play for quite some time relative to consumer discretionary, also relative to the S&P 500. To me, that's a completely different picture than what we're seeing here with industrial machinery. So if I had to pick between the two, I think we want to look in industrial machinery. A couple of individual charts. I just wanted to go back here and look at the small cap. I think it was the CHSP. I don't know if you all look at this at all, but if you set this up with the gears up here, if you remember, and you click on these gears and you have the additional data panels checked off, you'll get these panels. I set mine to the scooters, large cap, scooter, mid cap, scooter, small cap, because if I just hover over these charts that are showing big moves, I can get a good sense of maybe of some stocks that are looking pretty good. And the reason I do this with the small cap is that small caps just broke out above 1,600. So I'm starting to favor them a little bit. There was one stock on this list, CHSP, that if you look across was sideways consolidating. Now it's getting a breakout. And if we bring this up on a relative chart, obviously you can see the volume is huge. It's making a breakout to about a 7-month high, and it's getting close. This is the hotel and lodging group. But if we can get this breakout above this 125, actually, I think this might be hotel REIT. But the relative strength is the same nonetheless. Look at these relative highs that we're trying to take out with this stock on this kind of volume and this kind of a breakout. This is a stock I'd keep on my radar. All right, Erin, upgrades, downgrades. I will turn it back to you.
All righty, let's get this started. Get to the right place here. Yeah, there are quite a few upgrades today. And here we are. So let's go ahead and we'll start with those upgrades. Acacia Communications is going to be our first upgrade. And I thought it was very interesting today because a lot of these didn't go what I would say. I mean, I like to look at them. A lot of people said, well, what? I don't know the point. This is a fundamental thing. I like to look at them. It's stocks in the news. And I like to see what they're coming up technically, not just the fundamentals. So I always find it interesting to see which way they're going. Right now, you do have support on that 50-day EMA, which I think is pretty nice looking. But you did break down. You could see the breakdown below that low from April. So that's not particularly enticing. But, you know, the PMO, it is falling. And it's unwinding. So there is some opportunity, I would say, for it to move to the upside. But, you know, you get an upgrade and you're down over 4%. That would raise an eyebrow to me. All right, next up, Dish Network today was upgraded. Excuse me. And as you can see, PMO is moving downward when you look in the thumbnail, but let's face it, it's really mostly flat and has been since early April. Makes sense. It's been in a trading range at this point, and it's now sitting right in the middle. It's down over 1.5% today on the upgrade. And like I said, I don't mind trading ranges. I don't mind doing that, trading channels. But when you're sitting in the middle, you know, we could go either way. The PMO is pretty much indecisive. Notice that the OBV got a lower bottom from the bottom that we saw last week. Earlier, mid-April. So there are a couple of problems here. So despite the upgrade, I'm not particularly excited about Dish. EOG Resources today was also upgraded. And as you can see, 20-50-day EMA negative crossover right now. Really, I was very surprised at these upgrades. They just technically don't look that great to me. Of course, the analysts that picked these up, I mean, there are some technicals that they consider, but kind of interesting. I would say that, you know, you could make a case that support was found right here at that $90, you know, $88 area where we saw these lows back here. But if we draw, and I'm going to annotate this, if we draw a rising bottoms trend line, even from that December low, we're holding that support, but just barely. And with that PMO sell signal and the intermediate term trend model sell signal in play here, I certainly wouldn't be looking at this even as a bottom fishing opportunity on the upgrade. I mean, if you want to play the upgrades, downgrades like that, have at it, but I certainly don't. All right, Immunogen also upgraded today. Nice breakout from a trading channel. This actually is a bit more enticing, I would have to say. Let's look at a little bit of that support and resistance from that trading channel. Ooh, let's make that skinnier. Here we are. There you go. Pretty much solid little trading channel here. And now we're getting the breakout in a very nice way. Looks like we're going to come back and close that gap. You know, it is a biotech. These guys trade really volatilely. You're seeing a 17% move today to the upside on the breakout. I would just be careful. Low dollar stock, biotech, a lot of risk here, but it looks pretty good on that upgrade today. All right, let's look at Hilton. Now we're looking at a downgrade here. At this point, what I saw in here, I think the downgrade could be a good call, mainly because I would look at this possibly as an island reversal. The PMO is saying no. PMO is saying no, you should look for a breakout. We just got the buy signal. But OBV has been in decline. Look at the tops in decline here. And you can go back, let's see, right about here. You can see just even right in here that we were rising. And the OBV has been in decline up to this top. That's a pretty significant divergence in my mind. Scooter is still looking pretty good, but you know, on that downgrade, I'd probably stay away from this one. If I were holding, I'd probably stay holding it though. All right, last downgrade today would be Santander Consumer. The average daily volume is over 1 million. So a lot of times, even if I haven't actually heard of them, I'll put them in here because they are trading high volume on average. All right, we do have the breakdown today. It is down 1.25%. You can see in the thumbnail, you can see a little bit barely here. This to me is almost textbook island reversal here. You know, you got that really nice gap, the move up. But you can see, I mean, I'm not a candle person, but it closed below its open even after, you know, making that gap up, and it didn't break above that declining tops trend line. And that would be a problem for me. We did end up getting a gap down, which closed up that island reversal. PMO is in decline. Scooter doesn't look too healthy. Overall, I would have to say SC on the downgrade makes a lot of sense to me. All right, and that completes the upgrades and downgrades. Here are your symbols, and I will have these in the Market Watchers Live recap so that you can maybe go peruse some of those other charts out there that we had. X-ray, ANET were other upgrades. PCAR was another downgrade that you might want to look at. All right, time to move on into the Monday setups.
Yeah, and you weren't with us last week, but I did give you your due because you had a good pick from 2 weeks ago, which was Modine, MODN. I think that one was up 5% last Monday. It pulled back a little bit earlier this week, but that was a nice pick. And you weren't here to accept your congratulations. So,
well, thank you very much. I actually own that one. And I'm looking at last week's, and I own AYX as well. That one was a Monday setup of mine, gosh, I don't know, over a month ago, sometime in there.
Months. Yeah, that was the pick of the audience last week. And at 89.20, but there were earnings out this week. So that's a sword that you can live by or die by, depending on which way it goes. But AYX did report better than expected earnings. It gapped up. And I think it just it gapped up a little bit, but then it really ran. I believe it was on Wednesday of last week in the first 30 minutes of trading. And so that's when it got most of its gains. It's been holding on to them, though. So really nice pick there. Greg and I, of course, last week did the Monday setup since Erin wasn't here. Snap had a pretty good week. I know it was down a little bit earlier today, but I think that one was up a few percent. I think it was up maybe as much as 4 or 5% before this morning's sell-off in the market. Yeah, it's 11.65 right now, and was 11.23 last week. So that's up close to 4%. And I know Greg's did not do as well, but I think it was just pulling back to the 20-day. I think he would probably still agree that looks pretty good bouncing off the 20-day today, currently 48.70. So it is down a few bucks from last week, but I thought it had gotten a little ahead of itself. I think it looks pretty good off the 20-day now. All right, so we're going to move into our picks for this week, and I'm going to let you start it off. What you got?
All right, I have, let's see, 6 of them to present to you. I did use one of my scans. I used my new favorite, my bullish EMA mid-range scooter scan, but I actually started with my general PMO scan. I just wanted to get a few more looks at a few more stocks. So I ended up looking and picking from the scan results here, and then I moved on and took the scan results from my other one. And this is how I came up with those. I think I did a workshop a week and a half ago. You can get all of these scans from the Market Watchers Live recaps. All right, so my first one is Acadia Pharmaceuticals. Let's go ahead. I'm going to annotate this for you. While it's not completely textbook, I do see a double bottom here. I say that because generally you're in a pretty established declining trend before you get these reversal patterns, but I think you can make a case for it. So I'm going to make that case. I think you've got a double bottom here. You got the breakout from the neckline. Whoops, let's get that neckline in there. Confirmation line, I should say. It's not a head and shoulders pattern. And actually, if I bring this back, it matches up with that support from back in March. But I liked it because you got the breakout on Friday, and now it's pulling back. I love that because typically you're going to see breakouts, and then you're going to see a pullback toward the point of that breakout. And then you'll see it run. At least that's kind of what we hope it would do, but it doesn't always do that, of course. But I like this chart. I like that the OBV bottoms were rising along with the bottoms here on price. Again, breakout, pullback. I thought this one looks pretty good. We don't quite have the buy signal on it, which is what I usually like to find. I like to get in a little bit on the upswing of the PMO, not necessarily the buy signal. All right, so I thought that one looked pretty good, but not my pick. Aflac came in, and again, I wouldn't look at this as a double bottom here, but you did get the breakout above that April top here. We did manage to get just barely over the top that we had back in March and then pulled back. This is pretty much what we've been seeing on some of the other indexes and some of other stocks, certainly in the financial space. So we got the pullback to that very short-term support area, which is good. And now it looks like we're coming back up. PMO is already on that buy signal, and you can see volume, OBV volume going the right way. And we're now just poking up into that hot zone above 75. Next up, American Homes for Rent. And actually, I'm going to just give you a peek here because I wanted to show you. I really mixed it up here as far as the sectors. We ended up with a little bit of everything. The interesting one was the two software companies, which tells me that, that even though that group's been on a run, I think it's still got some run to go. All right, so back here to American Homes for Rent, continuing to move to the upside. Short-term breakout on Friday, pullback intraday to that point, look at almost exactly there, and coming back. PMO is on a buy signal and rising, certainly not what I would call overbought at this point. OBV making new highs with price, excellent. And the scooter, we're seeing that move into that hot zone. So I like that pretty good. All right, next up, Everbridge. And this is one of the software companies that I found and picked. You notice the PMO is flattening out. Doesn't want to make that buy signal just yet, and that's really a matter of timing as far as when I picked it. But the reason I did pick it, and I'm going to bring out the annotation tool here, is that pretty much textbook flag formation, a continuation pattern. Should expect the breakout above that flag, and then you count do a count as far as the height of the flagpole, add that to the breakout point. Looks like we're going to make some new highs here. I think that even though the PMO is flattened, it's really a matter of we're in this declining trend. But notice what's happening with the PMO. We're seeing that momentum building. So that's why I picked it. All righty. I will skip First Energy because that is going to be my pick today. But I really was struggling between this particular software company and FE. So, but I picked FE. Main reason I didn't pick this one, though. There's no main reason. It's just I like the other one better. But one thing I pointed out, the reason why I wanted to add this to my picks is the breakout. And the pullback, again, nice breakout. And the thing is right now, I think it's really, in a way, it's nice that we're having that pullback today as far as the markets go, because we had all of those breakouts. Now we're pulling back to breakout points, and that gives you some opportunity. I always like to see that. PMO buy signal, volume going in the right direction here. And of course, scooter is now in the hot zone. So I like that one, but the one I picked is right here. There we go. PMO buy signal breakout, and you've got the OBV moving in the right direction. I believe it was the weekly chart was one of the reasons I did that. We had the bull kiss here on the PMO on the weekly chart. We are making new highs, but again, we had the breakout on the daily chart on Friday, and now we're getting the pullback right to that spot. So I think there's a lot of opportunity out there. Tom, what you got?
All right. Well, your utilities, if we do continue to have weakness, the utilities might not be a bad play just from a more defensive standpoint as well.
Oh, yeah, I agree.
All right, I'm going to go with MTOR. I know that was one of your downgrades today, but I think it's an opportunity. I love the hammer that's printing today. I think the stock it went from 20 up to 25 in about 3 or 4 weeks just before its earnings report. Got really nice earnings. It beat on the top line, beat on the bottom line, gapped up, and then it just run so far. There were no more buyers at the moment, and we got that bearish engulfing candle. And you can see the PO here was turning lower with that false breakout and a bearish engulfing candle. So I think it was due for a 50-day test, but I really like this hammer. If this holds into the close, I actually already bought MTOR, so I do own it. But I'd be looking for a return back up 25, 25 and a half. And I think today's low, you could maybe, if you wanted to be very aggressive, you could just take it where it is currently if you like the stock. Otherwise, you might consider accumulating down to the intraday low and then just keeping a stop fairly tight right beneath that low today, which was down at 21.54. So there's a couple different ways to play it, but I like MTOR. So 22.63 is the price for MTOR. I'm going to go with that. But I do have some other ones that I like today. Another one that you had, I think, was on your upgrades and it's currently selling off. I do not own this one yet, but I am going to be watching this one this afternoon. It's on my strong earnings chart list. I think there has been a tremendous amount of accumulation in this stock throughout the second half of February and throughout March. April, we just kind of consolidated, much lighter volume. I think this pullback, especially if we get a long tail to the downside where it looks like it's breaking down and we get a reversal, then I want to buy it. So if it comes back up and holds, say 57 today on the close, I would be much more bullish. If it looks like this into the close, I'll probably hold off. I think perhaps you could get it as low as 52, 53 if it does break below the 50-day. So I'm going to be watching it, but I do like ACIA. Just a matter of whether or not I'd get in here. And again, depending on how it trades this afternoon, or maybe wait for a little lower price. But this is one that I think has been under accumulation, and I believe it's going to present an opportunity. AMD, I like Advanced Micro. Semis have been getting hit. I think Advanced Micro has been getting hit as a result. But this gap support has been holding. You can see a nice hollow candle today on this gap support. I thought about using this one for today's or for this week's pick, but I'm a little concerned with KLA reporting after the bell. Maybe we get that 50-day test first. That would be another 4% below where we are currently. So I like AMD. I think it really starts to look better as we get closer to the 50-day if we get that test. CTRP, this is C-Trip. This is another one like ACIA. I want to see how it closes, because if it closes down near the low of the day, you can see the volume picking up. I'm not going to try and jump in front of that train. But if it reverses and we get back up near that 50-day by the end of the day and we have a longer tail down here, I think that could be an indication that market makers are accumulating shares, and that would interest me later in the day possibly. But if it finishes weak, then I'd be looking at these other lows. I think that March 25th low, just below $40, and especially the March 8th low, which was maybe around 38.5. I think those two levels would be very interesting if C-Trip continues to drop. A few more here. FAST, this is Fastenal with earnings gapped up. I really like it at the current level. I think this hollow candle right near gap support, top of gap support, is a nice looking entry. I don't own this one yet, but I may own it before the end of the day. PVH Corp, another one that's going down, testing the area. After it gapped up on the heavy volume with earnings, it went down and set a low just below 122.5. And that's where the buyers came back in and on some pretty good volume. So I think if you get back down just below 122.5, I really like the reward to risk on this one. And then the last one I have is Yeti. Not only do I like their cups, but I like their chart here. This pullback, I think, is getting close to the support area of around $30. The stock was just at $36 middle of last week and now has pulled back. I think 30 presents a really nice reward to risk entry point. So I'm a fan of Yeti. And those are our picks for this week. You can see on your screen, Erin went with FE. I am going with MTOR. And those are the other setups that we had for this week. All right. Well, it is time now to jump into the earnings spotlight. And this earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, Better Trades. And Mr. Hopkins, you're making pretty good timing because you are joining us again today.
Yes, how are you doing today?
I am doing fine. Did you have a chance to get to the golf tournament?
The golf tournament.
In Charlotte?
Oh, no, I didn't get there. But you know what? Thinking about this weekend and thinking about waking up to these really red futures.
Yeah.
How quickly fortunes can change, right?
Yeah, as soon as I saw the futures, I'll be honest, I thought, okay, they're not going to finish there. There's going to be buyers coming back in based on what I see in the market. We're seeing a little bit of that today.
We're seeing it, but I'm saying nonetheless, you can see how quickly things can change, right?
Yes.
And it reminded me of the Kentucky Derby.
Oh my God.
And thinking about, I was reading some articles about some people who placed bets.
Yep.
If I'd been there, that would have been me. I would have had the 7-horse. But anyways, the fellow who had the 7-horse on top, and he wheeled, the exacta, so he had all the horses underneath it, including the 65-1.
Yeah.
And he also had the trifecta. So as it was before the objection went on the board and before they changed the order. And he was sitting there, he said, calculating in his mind, trying to figure out all the money he'd made from the exacta and the trifecta. He figured it'd be thousands because with a 65-1 number 2.
Oh, yeah.
And another horse behind it, not bad.
Yep.
He's figuring at least, $5-6 grand.
Yep.
Then the old objection sign came up. and then, of course, after 20-some minutes, it changed. So sometimes when you're thinking or counting on something, Tom, happening, it doesn't turn out the way you think it will.
Yeah, I think it reminds me of earnings, going into earnings report. It's like,
yes,
you place your bet, you're pretty sure you got a winner, and then you get disqualified when the split comes out overnight.
Let's start with that because it's in a little different order, I think, than maybe we had. But let's take a look at Google.
Okay.
For just a minute. That's one of the stocks that I had on my list today. Because there you go. If you took a look at Google strictly, the way it looked ahead of time, looked strong, a lot of companies reporting great earnings and really popping nicely, you'd be sitting there saying, that's my ticket. I'm going to have Google,
yep.
Into the earnings report. And you could have been holding on to that stock, for a couple of months, watching it rise, putting you in a good position. And then basically overnight, you're sitting there holding something and you've given up pretty much everything that you've worked towards. So this is one of the risks of holding stocks into earnings.
Yeah, Google, this one right here on this move up. This is when you're waiting for the earnings report and you're sitting in the winner's circle.
Yes, exactly.
Ready
and the objection sign comes on.
Yep. And then you see the flashing objection sign.
Yep.
You get disqualified. Your winnings are gone. And then you find out that really you're just holding a bunch of losing tickets. And
yeah, but Google, was one of the stocks that got caught. But here's the great news that I really want to talk about, and I really emphasized in my article in Chart Watchers over the weekend. Let's pull Microsoft up. There are so many stocks, Tom, like on our strong earnings chart list that we have right now, 280 some stocks that look similar to Microsoft. They had great numbers. They made a nice move. And now if you're patient, you wait for this to come back to you. The first spot could be at the 20-day, got very close, but even below that, a lot of support around 120 and just above that 50-day moving average.
Yep.
And if you're patient, I think you'll get there. At some point, you don't need to really rush into these stocks when they have good reports. Now, people look at it and say it's not going to get back to that level. It could easily get back to that level. And these are the kind of stocks, when they do pull back to support levels, these are the types of stocks that traders are going to be looking to get into.
Yeah, and I do want to mention, too, historically, once we get through the first week of May, which we're basically through, the market does tend to struggle for the next few weeks. It's not like a selling period. And I don't want to go back and support the go away in May theory because I am not a believer in that at all. But there are periods during May when the market does tend to just kind of go sideways and consolidate, and we're beginning that period right now for the next few weeks. So now that most of the earnings are out, everybody knows earnings for the most part beat expectations. I think the market could settle down. You can see that the PPO on Microsoft got as high as it's gotten at any point over the last 6 months, went up to 3. And I think in your article you had pointed out, John, the RSI got close to 90.
Yeah.
That is telling you that maybe things need to calm down a little bit. I agree with you. I think the 20-day and that price support area around 120, that's where we had a move up, a little bit of a cup handle, and then we broke out, moved up a little bit further. But I think going back to that 120 area would provide a great entry.
Yeah, and again, right now, when you see it at this level, you say it's not going to happen, but you're patient over the next week or two, could easily happen. And again, when the market does finally sell at some point, we get a decent pullback, you want to be positioned to get into the stocks that other people are going to be interested in. You get into a stock like Microsoft at 120, you have a potential 8 to 10 point to the upside, and you keep your stop tight, maybe a point or two below. It's a good reward to risk.
Yep, and who knows? Maybe it doesn't get back down that far, but if it does, I agree. Having a chart list, having the annotations ready so you can see that, and maybe even set up alerts in using StockCharts alert service. Makes a lot of sense.
A couple of other stocks that I think look great. OLED, OLED.
Oh yeah,
this has been a monster. Okay, and you can see the beautiful spike, in the volume, gap higher, and it's already, it pulled back to the 20-day already, and then bounced from there. I'd probably be a little bit more patient, with this stock, and maybe let it come back down to 178, 180 in that range, and maybe you take a little bit of a nibble there, but I think this is a stock that you want to keep an eye on.
Yeah, I think this one looks like it wants to go higher for sure, but it had this was the other earnings report that it came out in February with the huge move up, and it really never pulled back. It just continued moving up and came out with good earnings again, gapped up higher, took out those highs. I don't like that move up to 190 in the reversal. I think
I agree.
I think short term, it just got bought out. I mean, it was just too much to the upside, and so we pulled back. And for those who think, okay, that day when it got up to 190, I bet there weren't too many folks thinking that the next day it could possibly get back down to the 20-day. Yeah. But that's how fast the market can move in both directions.
That's how fast. Yeah.
Is a lot of times is rewarded.
Here's another stock, MWL.
Yeah.
And, again, it's just, very similar patterns on these stocks. Look at that nice, it's been great. This is one it's a higher price stock, so you can't take as many shares. But if you're patient with this one and you get a pull back to the 50 to the 20-day, maybe you get a tight stop, maybe you take a flyer on it. This will be another stock, I think. Remember, when the market pulls back, you're going to have a lot of stocks that missed earnings. They're going to naturally go lower. But the stocks that really had strong numbers are probably going to stand up the best and hold up the best when the market finally does see some selling.
Yeah, and I think looking at MELI, Mercado Libre, the gap up was on massive volume. It came back down intraday to about 5.25, and if you look back, that was the prior highs back at the beginning of April, and that's where the buyers jumped back in. So I think going forward, 525 is going to become a very big level. On MELI, and what will probably happen is maybe it goes a little higher, and if it does pull back to that 525 level, it could coincide. You could be getting both price support and that rising 20-day moving average coming up from underneath to provide a couple of pretty cool areas of support, and that could be a great possible entry point. But again, you have to be patient. If you jump in here at 566 and it just has that normal move back down to 525 again, you're down $40. You're down about 7 or 8%.
Yeah.
Before it ever hits a key support level. And that's the problem I have. I love the stock here, but the problem is if you get in, you got to be willing to give it that 7% to the downside. And I don't like to do that.
Yeah. And the last stock, actually, this was one that is we have a free newsletter, the Earnings Beats Digest. And you can go to our site and you'll just see a link that says free newsletter. But we featured the stock here, actually, with some of your input. VMW, VMware. And it's been a tremendous performer in the software group. As you pointed out, maybe the best industry group for the past couple of years. Consistently, strong RSI. And obviously, wouldn't hurt for it to pull back some. But this is the type of stock, that if you're looking maybe for some, longer term holdings, this could be a stock to consider.
Yeah, this is my favorite setup of any stock. I mean, if it's doing this, if it's moving up from left to right, if its peers relative to the S&P 500 are strengthening, and the stock relative to the S&P 500 is strengthening, the stock relative to its peers is strengthening, and the group overall is making absolute new highs, and the individual stock chart looks like this, it's hard to go wrong. And when you go back and you look at the type of performance this stock has had in 2019, these are kinds of stocks that really drive your performance beyond the S&P 500, that benchmark. And so this is what I try to do as best I can, is to find stocks that pull back, that have setups looking like this, going up from left to right across all these different relative charts that you see here. So I think VMware is a great company. Now, is it good to buy at any level? No. Of course, we want to get pullbacks and so forth, but this is a company that I would want to keep on my radar. And I'll take a look real quick and just see if the PPO, well, the PPO even on this last move started to turn back up again. It's down from where it was in February, but remember the PPO is based on the 12 and 26 day moving averages. And so 26 days is 5 weeks. This has been probably about 10 weeks. So I don't really, when they get this far apart, I don't look at where the PPO was back here. I think instead what I see is a stock that continues to strengthen. I think the 20-day, which has been a great entry throughout 2019, you can see earlier today it got close. Those present some great opportunities, I think.
Yeah. So aside from Google, which we showed, pitfall to holding a stock into earnings, these other stocks I've showed you are the types of stocks that we want to be involved in, that earnings beats. And in my article, I pointed out we've got 283 stocks that beat earnings expectations. You can't get on the list unless you beat the top and bottom line. And made a little invitation to people, if they wanted to see the chart list, just to shoot me a note. So if you just go to the, looks like you're closing in on it.
I'm getting there.
Yeah, there you go. Right.
So your article in Chart Watchers, profiting from pullbacks, and there's your Microsoft example. Yep. And there's a link in here, so if anybody's interested, they can.
Yeah, and I'll just shoot you the list. And there's a lot of good stocks. It's just, if nothing else, it's a great educational exercise to see which stocks, look the best on the list. And these are the ones. Inevitably, we're going to get a pullback, even stronger than we did today. Have yourself ready, have your list of stocks ready, be patient. You don't need to be involved in the market every single day. Be patient, and these are the kind of stocks you want to be involved in.
Yeah, I'm going to pull up a couple of others that reported today. I didn't go into earnings earlier.
Look at this.
But and this is the other Cisco, SYY. This is the food company. And I'm going to bring this up on a relative chart because first of all, it's breaking out here. It's also breaking out above that October high. And when you look at the food stocks here, making this push up in 2019, it's just kind of going along for the ride with the S&P 500. So, and it's part of the consumer staples. This is not typically an area of the market that leads, but you can see SYY heading to into its earnings report started to outperform its peers, and it is getting a nice breakout with some volume. So for somebody maybe who's looking for a better performing stock, but maybe with not the same risk as some of the other stocks, I think SYY is certainly one to keep an eye on.
Okay.
Tyson Foods, another one in the food space, reported this morning. Look at this chart. I mean,
boy.
Have people started eating more food? Are they going to 4 meals a day now instead of 3? Is that what?
They might be, but I don't know why you're talking about food stocks at lunch. I'm going to have to get going soon.
Well,
you're making me hungry.
I didn't want to mention I've gone to four meals a day.
And these aren't small meals.
Yeah, I probably should pull up Weight Watchers next. But yeah, here's a group again. The food stocks have been doing pretty well, but look at the relative performance in Tyson's before this earnings report came out. It was already wildly outperforming its peers. So we should have expected a decent report. Now I wanted to show you one more because this one's going the other way. This is AMG, which is affiliated managers. Look at this move to the downside, down 11%. Now the stock market's gotten back up to those highs that we saw last year, but look at AMG; it's nowhere near. And in fact, it's been going sideways ever since mid-January. And so, on a relative basis, do you see the opposite effect?
Yeah.
Here, everything is moving lower from left to right. This is a bad stock in a bad group that's underperforming the market, and then we get the news why they came up short of expectations. Outlook was cloudy, and here's a stock getting hit. No one should be surprised if you follow these relative charts.
Yeah, charts don't lie. Okay, my friend.
Yeah, well, it's always a pleasure having you on here, John, and appreciate all of your expertise here, and we'll see you again in a couple weeks.
All right, you take care now.
All right, there he goes. And here were the stocks that we just talked about. Of course, John mentioned those first handful, and I just wanted to bring those others up because we hadn't talked earnings, and it is important to watch these relative charts. I mean, I see it over and over again. They don't provide us any guarantees, but if we're looking for odds and probabilities, and coming off the Kentucky Derby, I think that's very timely. We're trying to look for the odds here. Right, Erin?
Yes, absolutely. It's funny that you talked about the Kentucky Derby. We had the winner, and then I went off to take a shower so I could get ready for where we were headed. Can't remember where now, but came back out half an hour later, and I'm like, wow, did they, have all the festivities and everything? He says, that horse didn't win. And I was like, oh my gosh, I can't believe it. And then he explained what was going on. And I've never seen quite that big of a pullback, if you want to say.
I think that was the 145th running of the Kentucky Derby, and they had never had a disqualification. I think there was one that was disqualified the next day because it had failed a drug test, but there had never been a disqualification of a horse winning the Kentucky Derby like that, where there was an objection. And I
just can't imagine being those folks who were holding these winning tickets. I mean, I'd have been counting the money. I just can't even imagine how heartbreaking that would be. Yeah, anyway, here is the 10 and 10. You can see that comp services are actually leading the categories as well as healthcare. So we'll look at a few of those, but let's go ahead and get started with the first one, GE. What are you thinking about General Electric?
Well, it looks better than it did. Clearly, it's come off the bottom. It's at least temporarily suspended its downtrend. I'm not convinced that it's over just yet. I would be much more convinced, I think, if we could get back up here and clear this high. We established a pretty important resistance level at about 11 and a quarter on some very heavy volume, 300 million shares, mostly sellers, because once it opened up, you can see we closed almost on the low. So even though it was an up day, this was mostly selling that took place after that huge gap up at the open. And since then, we have not been able to get through. So I really want to see GE get through that level. That coincides over here with a key support area. I mean, once we broke down below 1075, even though we got up over 11, we didn't have any closes over 1075. And you can see the selling that took place back in November on this move to the downside. So I really want to clear that 11 and a quarter area before I get excited about GE in the near term. But I could draw another line that would I probably could have annotated one more here. After the gap up, look at these pullbacks to around $9, just below. In fact, it looks like intraday we may have filled this gap right back here. So I just think we're trading sideways now. Even with the market continuing to move higher these last 2 or 3 months, you can see GE has just been going sideways. And so when we look at it versus the S&P 500, it was actually drifting down. So remember, just because the stock is going up or it's holding on to gains doesn't necessarily mean that it's a great stock, especially if the overall market is doing even better. So GE to me is it's better than it was, but I'm not convinced yet. So I would avoid it.
All right. The most popular in the chat room is Facebook.
All right. And by the way, GE is on my strong earnings chart list. So I have put it on there because I want to watch it, but I'm just not convinced yet.
Mm-hmm.
Okay, Facebook. Well, you can see internet stocks pulled back here over the last couple of weeks. Facebook continues to move higher, though, on a relative basis. So it's pulled back, but not as much as the group. That's a bullish development, I think, on Facebook. So as far as I'm concerned, I think stocks like Facebook and Twitter have done kind of turnabouts on their charts. And this was a downtrend. We had a change of character, especially on that gap up where we held this 160 level, double bottom breakout. I think we're trending higher. I think that's undeniable at this point. So I think I like the rising 20-day moving average and then gap support. I would say 180 to 185 or maybe 182 to 185. That's an area I'd be very interested if Facebook were to pull back.
All right. Let's look at Disney.
All right. Disney has been a great stock. It has been pulling back. I've been waiting for the 20-day moving average. But this is a stock that clearly is leading the broadcasting and entertainment stocks higher. If we put a couple of, this was when the earnings report came out. And remember, they said that they were bringing out the Disney Plus service at $6.99, which is about half the price of Netflix, their streaming service. So anything back down into this level, I would definitely be a buyer. And I actually would maybe consider entering at the 20-day first if we get a 20-day test. We just recently had this top, blow off top on heavy volume up around 142.5. So I think we could consolidate. And if we do hit that 20-day moving average, I'd be a buyer.
All righty. Let's see. How about T-Mobile, TMUS?
Yeah, this is one that I actually expected more out of. It's doing fine. It actually made a new closing high on Friday. It's held up pretty well given the market's struggles today. I see a stock that simply wants to go higher. Breaking out and holding above this recent breakout level, I think, is going to be key. We're trying to do that now, but you can see got up to 74, again to 74, almost to 74, again to 74, gapped up over 74. And then finally on Friday, we closed above 74. And I think it was poised maybe to move higher today if we had seen a little bit better market. But unfortunately, market selling, taking a lot of stocks down with it. I think T-Mobile stays above its 20-day moving average, which has been holding here over the past month. So I think T-Mobile goes higher. I like it.
All right, excellent. Let's see. Next up, WIN, WINN.
Right after the Kentucky Derby, WIN.
Mm-hmm.
All right. I like the 20-day. I actually like this support area here around 140. That's been holding of late. So short-term support is at 140. And I could keep a pretty tight stop right in here. After moving up on very strong volume, pullbacks have been shallow, and buyers have jumped right back in around 138, 139. Today's low, 138.37, tested that level. Here is the top side, which is up at 151. So there's your reward to risk. Couple dollars to the downside, maybe about 10 to the upside. I think it looks pretty good here.
All right, excellent. Next one up, Citigroup, C.
Yeah, Citi was one of the larger banks that came out, did well with its earnings report. You can see the move up, taking out these prior highs, continuing to hold above its 20-day moving average. The biggest problem, and it's getting better, or at least it has for the last 6 weeks, but the biggest problem is just the longer-term relative downtrend in banks versus the S&P 500. The way that's going to reverse is to get some more movement to the upside in the 10-year Treasury yield. Until that happens, I think the banks can go higher. I just don't think they're going to lead. So for that reason, I would stay away from them. And because they are in a relative downtrend, I would keep a tight stop. I think if you lose the 20-day moving average, knowing what I know about the relative performance of banks, I'm not going to hold it. I just don't. This is not a strong area of the market. I'm not going to make any excuses for short-term breakdowns.
All right, Bristol Myers, BMY.
All right, BMY. Definitely not one of my favorites here. If you look at the stock relative to the pharma group in general, I think that is the big problem here. So let's go down to this relative chart. And it was doing okay until, I don't know, maybe late last summer. But look at what has been going on. This is a downtrend. We're not far from a 52-week relative low. So if you were going to get into the pharmas, this is going to be one of my least favorite. I would prefer Merck, probably even Lilly, and some others. But there are going to be some overhead areas that this is going to have to clear. Eventually, 53.5 has got to be taken out. And you really want to watch this level down here because it looked like maybe bottoming head and shoulder pattern, but we've gone all the way back down to this head, which is not normal. We should have stopped probably up in here somewhere, 47, 48. So I'm just not liking the pattern here. I think that there are other stocks within this space that look a lot better. So I'd pass on BMR.
Okay, let's see. Next one is a biotech for you, BIIB.
Yeah, this one gapped down and is really not showing any life yet. Look at the relative strength drop versus its peers with this huge move to the downside. So I think it's established overhead resistance with its rally, that reaction high, which was right there. So I'm going to say around 243 or so is a level I want to see negotiated. Then if we get through, then maybe we'd have a little bit of a run in it, maybe another 10, 15% up to close to 280. But there's just too many other stocks in the biotech space that are outperforming. I don't want to go with an underperformer because the entire group has been underperforming. One other thing to watch here, there was your support area just below 1950 for 3 months. We broke below, and look, we're rolling over just as we come up and test that area now, price resistance. Relative strength has been horrible in biotechs. And so for that reason, I definitely don't want one of the weaker ones. So I would just avoid it completely at this point.
All right, let's see. What do I have next for you? Ultra Clean, UCTT.
I really like this one. This is on my strong earnings chart list. Just saw the report come out. Look at the breakout here above $13. Look at the volume coming in. Even today with the move lower, everything's so bad in the market. Stock's down 10 cents, holding in really well. Here's your semiconductors moving up. And look at the relative strength building now. Maybe one thing to watch is to see whether or not we get this relative breakout versus the semis. We're already getting that versus the S&P 500, by the way. But let me bring up that support line and resistance line. There is your relative resistance. So there is that top that we saw a few months ago. We need to take that out. But here was the move on the S&P. We did break out relative to the S&P. And semiconductors, even though we've been weak the last couple of weeks, the overall trend, I think, remains to the upside. So I think you got a strong group and you got a stock that's just beginning to show some nice relative strength, breaking out. Nice support here, close to 13 on that tail. I think this is a nice looking stock. I believe it goes higher. My best entry would be maybe down around 13.25 if it were to pull back one more time.
All right, we had 4 biotechs requested, so I'm going to give you one more. Emergent Biosolutions, which is EBS.
All right, another one that is down near its low, relative strength. I mean, look at all these lines. I mean, that's the thing I would focus on here is we want stocks that are outperforming across the board. And instead, what we have is a stock that's going lower, threatening to break to a new 2019 low. You can see that was the breakdown that I talked about here, but you know, we could draw from earlier in the year. You could definitely see there's a little bit of downward bias there. EBS relative to the biotech. So not only in a weak group, but you got one of the worst stocks. That is not a good combination. Here you can see the stock just underperforming the S&P 500 by a very wide margin and the group continuing to underperform. So when I look at a chart like this, I just have no interest. And if you need one more reason, look at the volume trends. On these moves to the downside, lots of volume, lots of sellers. The only thing that I could say about the stock that I would have any interest whatsoever is that we literally are sitting on this price support. So maybe this is a double bottom, but that doesn't confirm until you get a breakout above 54. In the meantime, you know, here we had a move down, put in a double top, broke down, went right back down again. I think you pay attention to this trend, which is lower. I would avoid it.
Okay. And excuse me, that does complete the 10 and 10. Here are the symbols that Tom just annotated. I will have all of these charts with annotations up in the Market Watchers Live chart list. Just go to the articles blog tab, click on Market Watchers Live blog, and the link is right there at the top. All right, time for our final market update. All righty, here we go. At this point, all of the markets are down, really, as far as the major markets go. Dow down over 240 points, S&P down over 30. You can see these big opening gaps down. Did try to make a comeback intraday here, but we're starting to fall right back down toward those losses again, toward those intraday lows. New York Stock Exchange, same, coming back down, but I think a little bit closer to those intraday lows. Russell 2000 small caps down a little bit here, down 8.25 of a point. You've got the TSX, big gap down, not pulling back quite as much, moving more sideways and then backwards. Treasury yields are lower on the day, 2.484%. Look at the volatility index spiked all the way up almost to 18 and currently reading at 1657. This makes for a very interesting sentiment chart that I'm going to show you a little bit later. UUP, nice move on the open, but is pulling back at this point toward the close from Friday. Gold, on the other hand, is rising nicely in a rising trend. Hasn't quite overcome Friday's overhead resistance there at that intraday high. USO is mostly unchanged, but up slightly, reading 1288. TLT, gap up and consolidating mostly sideways. May have hit its intraday high at the ceiling here on the Wednesday top that we saw. As far as sector summary goes, not a pretty sight. We don't have any of the sectors leading at this, any of the sectors in positive territory, but notice who is on top, losing the least, and that would be energy, real estate, staples, and utilities. All of these considered in that defensive types area. Well, not so much energy, but you can see the four just below. And those are all defensive areas of the market, but still not leading, just doing slightly better and not losing as much as technology and materials, which are both down 1.4%. All right, Tom, pass it to you and get ready for sentiment.
All right. Yeah, I wanted to just take a look at the small caps real quick. So here you can see the Russell 2000. And when I kept talking about the 1600, I just wanted to highlight this and give everyone an idea of what I was talking about, because I kept talking about we need to get through 1600. We need to get through 1600. When we had that big drop in October, you can see the bounce went right back to 1600, failed. We got up to about 1585 or 1590 in November. Then you can see the break intraday above 1600 in February with the failure and back down. And now look at all of this movement up here above 1575, but not able to get through 1600 until Friday with that jobs report. Finally got that breakout. And now today, yes, the Russell's down, but it's outperforming. It's only down 0.5%, whereas the other indices are down more than 1%. So we're starting to see outperformance, and that shows up on this other chart. So this is a 2-year chart of the Russell 2000 relative to the S&P 500. I know one thing I had pointed out recently was the lower low, the lower relative low here with the PPO turning up. That's a positive divergence. I would look for relative strength, and we're starting to get it. I would just say that in the short term, I'm not looking for anything major, but I would really, I think it would be a very, be really good news for the market, I think, if small caps on a relative basis could move back up above this high around 0.57. You can see multiple attempts, and this dates back to October when I was showing you that 1600 level over here. This was in October. Well, that was also a relative high. So even though we've gotten back above 1600, look at the relative weakness since then. So we're starting to play catch up. I think we could continue to see some strength in the Russell 2000 on a relative basis, but a breakout above 0.57, I think, would really confirm some serious bullishness taking place in the market.
Yep.
And that's what I had. So I'm going to let you take it away, Erin. I know you've got sentiment.
Yes, and I think it is good to see the small caps starting to improve. That's good for the overall market generally.
That's like a 5 or 6 week high that we're at right now on a relative basis. That's good.
Yes, absolutely. All right, well, let's move into the sentiment report. Today, May 6, 2019, here is your sentiment update. I will be giving you a look at quite a few sentiment charts today. We're going to look at put-call ratio of the American Association of Individual Investors, AAII, NAME, which is the National Association of Active Investment Managers. We like to see how exposed to the market these big-time money managers are. RIDEX ratio, I'll explain that chart a little bit later. It's a DecisionPoint exclusive. And the Wall Street Sentiment Survey, Mark Young does this every week. We'll talk about that. The VIX I use as a sentiment indicator, as I think most people do. So I'll be looking at that, as well as breadth. We had some interesting climactic readings on Friday. Gold sentiment, really interesting chart there. So stay tuned for that one. Let's go ahead though and kick it into the charts, and away we will go. Okay, let's go ahead. As I said, we'll start with the 10-day moving average of the put-call ratio. On our DecisionPoint charts, always kind of pay attention to the scales that we do, because a lot of times we do invert our scales, mainly because it's easier for me and Carl to remember that if a reading is near the top, that means it's overbought. And if the reading is near the bottom, I want it to look, that's oversold. If I try and switch it back around, you know what, my brain at this age just can't handle that. So at this point, we do invert our scales, so just pay attention to that. The main thing I'm going to point out here on the put-call ratio chart is that really all of these are, I would say, in somewhat overbought territory and have maintained that position since about mid-March. It's not telling us enough. I would think, being as overbought as it is, that we would start seeing a move downward, which would be, of course, a move down for the market itself. However, it's just been able to, take these overbought readings and just persist, just moves, continue to sit overbought. So it's not giving us the kind of information we want. Although I have to say, when I see the OEX put-call ratio also moving into that overbought space, that's interesting to me. So you can see back here where we had some overbought readings, and they were on all three of these. A lot of times the OEX put-call ratio will travel in a different direction, as you can see back here. My understanding of somebody I've talked to is that typically OEX put calls are used more in a hedging position. So a lot of times that ratio will travel in a different direction. But to me, when I see all three readings near a top like that, that to me is quite bearish. And again, you can see back here, there's another one where all three of them were lined up, of course, before the big decline. And let's see, we had another one, well, kind of back here. We were mostly moving sideways, so I'm not that interested in what was going on with those tops. But you can see all three tops pretty high right here before that decline. So I would have to say, seeing overbought readings on all three of these indicators, I would be looking at more downside. I prefer not to have to look at more downside right now, but unfortunately, I think we might have to. All right, let's look at the AAII.org sentiment survey. You can go to AAII.org and for free, my understanding, is take the sentiment poll. Do you think, are you a bull or a bear, or are you neutral going into the week? And this is where we get that information. What I'm finding, just looking at this chart, is, we're pretty much staying with the same amount of bulls. I don't see this as a particularly climactic amount of bulls at 39%. We've certainly seen much higher readings here. That look at these climactic readings that we've had, and they were certainly higher than what we're looking at now. So I'm just considering the fact that we have a flat amount of bulls. We're not getting an increase in bullish sentiment. And look at what happened during this whole time. In the thumbnail, it's been a really nice rise to the upside, but the amount of bulls just aren't quite spiking quite enough. But on the other hand, we've lost a lot of bears since coming out of that December bottom. And it's continuing. At the last 4 weeks, we're about the same, said right around that 2130 area for the amount of bears in the percentage area. What's really interesting to me, so not only are we not seeing the most climactic readings and nobody's getting more bullish, I mean, you come off of this this nice move to the upside, this rally, and you don't really gather any more bulls. That's suspect to me. And then we had the decrease in bears. And again, the more bullish people feel, the more bearish that is for the market. Look at the different, the bull-bear ratio. When it reaches, if it's 1, that means obviously there's an even amount of bulls and bears. And to me, a 2 is climactic, 2 times as many bulls as there are bears. That to me is very climactic, so twice as many. And right now we're still right up in that 2 area. So I would say that is a climactic, very bullish reading as far as those, the sentiment that is out there, and that's mainly because of that decrease in the bears. But we're still looking at somewhat climactic, very bullish readings overall. And so to me, that is also bearish for the market. Let us look at the name exposure index right now. We are seeing these elevated, very high exposure readings. And that, you know, obviously, so the money managers are exposing themselves to the market. You can see that, look at the difference here. This is, of course, exposure, not, this isn't a finger in the wind survey. So I always find those especially interesting. But remember when we were looking at that sentiment chart, the one just before this, we were seeing the really nice rise on the rally and no increase in bullish behavior. Look at the difference here with the, I'll go ahead and say it, the smart guys, the smart money. It actually, the exposure, with the exception of what we saw here at the end of March on that big move down right here, that was when the exposure was pulled back. But overall, we're seeing this increase on average to the exposure during this rally to the upside. But over the last few weeks, we're seeing a little bit of a pullback in that exposure, still very overbought. So I would say that that's bearish for the market at this point. Next up, Wall Street Sentiment Survey. And actually, I think it was this one I wanted to look at. Indeed. Okay. So the Wall Street Sentiment Survey, and you can check out more about it here at wallstreetsentiment.com. Mark Young sends an email out to a group of market timers, myself included, Carl included. It's a fairly static pool. We've been doing it for years and years, and they don't usually change up who's in it. So it's, you know, I find that the data is pretty good because you're not seeing a, you know, a mix of different people every week who are taking the poll. So I like this one. Unfortunately, I don't like it this week because it's telling us absolutely nothing. We have an equal amount of bulls and bears, a 1 reading, of course, on the bull-bear ratio. That tells me absolutely nothing. So unfortunately, I have to say Wall Street Sentiment this week, completely neutral. Really not much information there. And you can see even the readings haven't, over the past month, haven't really increased or decreased too much. All right, next up is the RIDEX analysis chart. And I told you I'd talk about this one a little bit more when we got to it. So RIDEX was a company that used to manage a group of funds. And every night they would report to us how many assets were in each of the funds, including the money market. Guggenheim took them over and kept the funds alive. We call them RIDEX, but that's no longer in their name at this point. But it's a group of static stocks, I guess you could say, or funds. You have the same number of bull funds as you do bear funds, and then we also have the money market funds right there in the middle. And every night, like I said, they report their assets and we track it. And that gives us an idea of where the money's actually going. It's one thing to take a survey and say I'm bullish or I'm bearish, but then go and look at their accounts, their trading accounts. Well, what are they doing? Oh, well, they said they were bullish, but they're selling. You know what I mean? So it's this is actual money. So I find that this is a particularly good sentiment indicator. However, it's not telling us too much again this week. Really, what I'm seeing is, and you can see in the thumbnail, mostly flat as far as bear funds go for the past week. And then we have slight rise in money market funds. And then we are seeing a little bit of a pullback here on the amount of funds, assets in the bull and sector funds. So let's think about it. People aren't going in and buying more bear funds, because if they were doing that, that would be especially bearish. They're very flat, they're low. That tells me that, it's sort of a bullish reading there, even though it's flat and not going anywhere. Slight increase in the money markets, but not a significant one. But that implies neutrality or concern about the market. You're not so bearish you want to get in a bear fund, but you're not so bullish that you want to stay in a bull fund. And that's what we're seeing here. Pull back on bull funds, slight increase in money market. So to me, it's likely that what we're seeing is, people kind of moving into cash slowly. So they're not very bearish, though, because ultimately we're not seeing a lot of assets here in these bear funds. There's no increase really going on. So I would have to say, in general, you're looking at kind of a neutral chart, but people are starting to get a little bit more bearish. So I'm going to look at this chart as still somewhat bearish, because we're seeing that pullback in the bull funds, but we haven't gotten to the point where we're increasing in the bear funds yet. So I'm reading it as mostly neutral, but the one thing that does give us a little bit more of a pulse on what's going on is the RIDEX ratio. And at this point, it's near the top side here of the range. And again, inverted scale. So overbought. Right now it is in that somewhat overbought territory. Typically, of course, that is not good for the market. You can see where we've had previous moves to the top of that ratio. And there's one back here, of course. So at this point, we're starting to see that overbought reading in the bull-bear ratio, and that could be considered a bit of a concern. Well, let's look at the market VIX and breadth. And, on Friday, Carl and I saw these very climactic readings and talked about them on the DecisionPoint show, which airs at 1:30 Eastern time every Friday. And we talked about how these readings to the upside were fairly climactic. Even the new highs, we were looking at fairly climactic readings. And to me, it was a little bit hard to determine, is this going to be an initiation, a buying initiation that we're seeing with these positive readings, or are we looking at a buying exhaustion? Like, we had the big pop. Was that it? Did we just exhaust an upside move with that? And Carl and I discussed it, and because at the time the VIX was pretty much right in the center, it didn't have a feel of an initiation. We didn't have that especially bullish VIX readings. So to us, it looked more like a buying exhaustion, or you could say, I guess, a selling initiation. And so that's what we called on Friday, and we did start to see that move to the downside. I want to point out the VIX moving today well below the Bollinger Band. Very climactic reading. And typically when you get these big climactic readings to the downside, as far as my inverted scale, you can see I marked a couple of other times where we had these moves well outside the lower Bollinger Band. And typically these are not bad. You can see back here we had a little bit of a move to the upside. It doesn't always mean we're going to get a lot of interest going on. You can see the market sort of flattened out right now. So You know, I would look for after, you know, I'm curious, of course, to see what our readings are going to be here, but I suspect we might get a little bit of a pop, a rally pop to, you know, take care of the decline that we're having today. All right, getting down here near the end. The gold sentiment chart. Let's see, I don't want that one. I want this one. Nope, I want the last one. Depends on what you're looking at here. No, actually, it was this one. Okay. I'm sorry, trying to get the right one on here. None of these are the right one. I apologize. I got to get to the one I wanted to look at. I guess this was it. No. That, or I did not save it. All right, well, here we go. Ah, this is the one, actually it is. So I'm looking at a Head and Shoulders. We got the breakdown, but it wasn't really that decisive, and we're now just kind of moving sideways. But I don't feel like that Head and Shoulders has really evaporated yet, because the declining tops trend line hasn't even been tested here at this move to the upside. So for me, I think the pattern is still viable, although I don't, you know, since we had it execute and really not follow through, not quite as bearish as you might think. We did get that move back to the upside here above those lows. But I still think the pattern is in play, so I would suggest caution. However, look at the PMOs turning up. The big thing as far as the sentiment are, what are we looking at as far as the premium and discount for the Sprott Physical Gold Trust? And right now, we have a discount reading higher than we've seen in 2 years. High negativity and big discounts are considered bearish for gold. So when we have a spike in bearish activity like this with these discounts, that typically is a good thing for gold. It just might take a little bit of time because you can see these readings can persist for a little bit, and you can still end up taking a hit on the chin here with a downside move just because these conditions can persist. All right, that pretty much wraps it up. I'm going to put in here, I'll show you our here you go, the conclusion. I will put these charts so you can look at them more closely in the Market Watchers live recap. But I have to say, overall, I would be looking at bearish activity here as far as the market goes coming through this week and maybe into next. But you know, sentiment is sentiment. It's just really a confirmation tool or something to think about. All right. That is it. But now I guess we need to look at that poll, Tom.
Yeah, we can take a look at what everybody is voting on. And I guess because the producers had the winning pick last week, they're going to jump on board with them again this week. Adobe, 35%.
Yeah, I'm always at the bottom. But see what happened the last time for me. I had that big winner, so I don't ever feel bad when mine are on near the bottom, and I've bought a few of mine, as I've told you. So, but I always find it interesting.
I think some of it too is recognizable names. Adobe's the most recognizable name on that list too, which I think adds in.
Oh, sure.
Little extra there. But yeah, I like MTOR and ACIA. I'm just kind of watching for now, but I do own MTOR. We'll see. That one's doing okay. Still hanging in there with that hammer. So we'll see how that one wraps up. But I was looking at Adobe just a little bit ago. Of course, Adobe's in the software space. And like Microsoft, you know, John Hopkins and I talked about Microsoft earlier during the earnings spotlight segment. And the fact that when these stocks get pullbacks, they find buyers. Adobe did the same thing today. Adobe was over 290 3 days ago, pulled back, and today opened at 277, and now currently trading at 281. So definitely those big names tend to see some love, get some love during these pullbacks. All right. Well, that's just about it. I will show you that chart real quick on the Adobe, but this was the pullback. There's your 20-day test. And you can see on Adobe that 20-day has been holding. So I would suspect that maybe Adobe could make a run back up toward that 290 level. We'll wait and see.
Yeah, looks pretty good, actually.
All right. Well, it is time to wrap up. I do want to thank everybody for being with us today. Please remember to complete the survey as you exit. It is located below the video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great afternoon, everybody, and we will see you back here tomorrow, Tuesday afternoon. Happy trading, everyone.